Hello, world economic news, and it's Thursday again. Chart below, Case-Shiller, housing, America. You can see where it went up and how far it went up, and it was getting at 16-18% positive a year increase in house prices, and then it went down below that line, and anything below the line was house prices going down, and it was then at its worst going down 16, 18, 20% per year house prices. By the end of last year, it had crawled its way back up to going positive again, but that is now almost an official double dip. And it's going to be very interesting to see where it goes from here. It might go down further, or it might just crawl along the about zero line. But just think about the amount of the powers that be power that has gone into trying to get that to go positive again. An awful lot has gone into getting that result, and that is not very impressive, is it? Next one, to Detroit home price index. The poor bastards didn't stand a chance. You can see the effort that was made in Detroit to go positive. Nothing. Basically, it's just gone from bad and is now going worse. You got to feel sorry for them. Alphaville, Michael Pettis on China's very risky Zyteku, or Zyteku, I don't know how you say it, it's Japanese anyway, and we get what it is. According to the Japan Link website, Zyteku is an abbreviation of Zaimu and Technology. You know, like saying technology, but in Japanese. Technology. Which means raising profit by utilizing capital for securities, investments, real estate, and the like. To you and me, that you've got a company that's doing something like making cars, and they use what they can borrow on the company and use the cash flow, use whatever they can to go and invest in the real estate market around them that is booming. And that was what the Japanese did, and that was very profitable for them, and that's why the stock market went up so much, because the companies were so profitable. But of course it was all based on a bit of a Ponzi, that the real estate market round them would continue going up, and it seems to be that is what Pettis is saying the Chinese are doing as well. In the late 1980s, the Japanese company, well, it's just going to repeat what I said there. So the point Pettis is making is that things like overinvestment, we're in China here, everything Pettis is basically China. Overinvestment, excess liquidity, credit expansion, off-balance sheet activities, and the Zyteku can all conflate to generate huge growth, because it's a huge, everything's going. As long as people are taking money out of business, putting it into the real estate market's going up, everyone's making profits, everyone's well happy. But also it's taking very big risks. And this is what the PBOC is trying to manage. That's the People's Bank of China, the Central Bank of China. But unfortunately, they are not what you might call independent. They will do what the politicians tell them to do. And politicians are notoriously short-term minded, even Chinese ones with their 5-year plans and what have you. Moving on. Business Insider Money Game is this Taiwanese export data, the canary in the coal mine for China. And it's nothing tragic, you can see from that chart, whatever it is, 3B. But all through last year, you can see the trend all the way through was to be less and less impressive, less and less export wonderful. And if that is the same for China, that spells maybe the start of the end of the big everything's booming. And we know what happens from the first chart we saw what happens when we get an end to something that has been labelled everything's booming. Everything seems to turn down nearly as quickly as it was going up. Guardian Co UK as an example, hundreds of repossessed homes in Ireland to be sold by auction. Flats in Ireland, flats are apartments. In Ireland, that could have fetched €150,000 in the Celtic Tiger years, are being put on the market for as little as €25,000 in the country's first ever mass auction of repossessed homes. And in a sign of how wide the property crash is, the latest item to turn up in liquidation sales in Dublin is a job lot for 15 cranes, including a pair towering over Anglo-Irish Bank's half-built headquarters in the city's docklands. Tower cranes were among the most sought-after heavy plant and machinery 10 years ago. Ricky Wilson of Wilson's Auction says, "You couldn't buy them quick enough, and now they're left idle for 2 or 3 years on the sites." How the mighty stupid have fallen. This is an article in the Financial Times, an actual article that if you're not subscribed you might not get hold of, and you'd only read it if you're really interested in Euroland. Now I've done a Euroland special this week, so I can't go into it too much, but it's written by Axel Weber, the Bundesbank man that has been asked or has said that he's going to go and spend some more time with his family. I'll give you his last paragraph just to show willing, but it's an interesting thing to read. I read it very, very carefully. Every word you can see is very German and very, very chosen very precisely. It's a very illuminating document. The current crisis has challenged the founding principles of EMU. Still, EMU can emerge stronger and more resilient than before. To that end, the decisions on EMU governance have to reinvigorate rather than circumvent the basic principles of subsidiarity, responsibility of individual member countries, and the no bailout as laid down by the launch of the monetary union. This is an opportunity that must not be lost. That's kind of political sort of talk saying, we've agreed to contracts for going into this club, let's not dick around with them too much, or we won't know where we are, and we're Germans and we like to know where we are. Alphaville, Ireland's stylised sovereign bank loop. This is what I've been trying to, the Central Bank of Ireland printing up money and getting it to the banks, and the banks printing up bonds and selling them to themselves and then hawking them off to the Central Bank of Ireland or the European Central Bank and all sorts of other things that I'm trying to keep up with it, but it's just a monstrous mess. It really is. It's just desperate nonsense, far as I can see. And to sum this up, there's the headline of that, Ireland's stylised sovereign bank loop. I mean, they're just borrowing from one to give to the other. I don't understand it. And it's summed up in a comment by Tom. I guess if you're going to swallow a spider to catch a fly, you might as well do it with gusto, like Ireland, and get to the horse as quick as possible. You know that old children's rhyme, they swallowed a fry to spark the spider, da-da-da-da-da-da-da, and it must be the horse in the end. Well, in the end, I'm sure it's, swallowed the fly, perhaps they'll die. And it's pretty sure that ultimately Ireland will die of this sort of nonsense. I mean, it's ridiculous. It must be. I don't understand it. Anyway, Wall Street Journal. Richie Rich could have used this camp. Richie Rich. It by Shelley Banjo and Erica Auden. It's not easy being rich. This is the Wall Street Journal. While many college kids work internships this summer, The sons and daughters from 20 of the world's richest families will head to New York to learn how to wield their money and power the right way. The $25,000 6-week program launching in June is designed to give the next generation of wealth clues to running a business and giving to charity. Participants will also take trips to the most exquisite weekend getaways, including the Hamptons, Cape Cod and the Berkshires, according to the program's brochure. Called Global Fellows in Social Enterprise. I'll repeat that. Called Global Fellows in Social Enterprise, the program is the brainchild ... To continue reading, subscribe now to the Wall Street Journal. No. Bye.